that some goal, that goal hasn't changed, which means you have to stick to your guns and follow through. We're gonna be in Davao. We're gonna be there, make a difference in the lives of many people. So please, be there with us. It's going to be one powerful day of learning, one powerful day of awesome experiences. We'll see you there.
We have Rex Mendoza in the house for this video. So, any greetings first before we start?
Good morning. Just want to share with people, you know, it's Rampver's 25th year. It's our anniversary week. Happy anniversary to all the Rampver employees, Rampver clients, and Rampver followers.
With that, no, building a business for 25 years, most businesses fail on the first year, fifth year of operations. What made Rampver stand out in a very, I guess, crowded market na rin?
Well, we're known to take care of our customers. We'd like to handhold. We'd like to make sure that they, you know, get to achieve their goals. I think the most important part of it, we keep things simple. I mean, it's 25 years of fulfilling financial dreams. But on top of that is to make sure that we handhold clients into very simple pathways to wealth. Nothing complicated, because most of our clients don't want that complication.
So to make it easy, no, parang what you said was, if you're a business owner, the best way to make it grow and sustainable is to give as much value to clients as possible. So now here's the meaty part. People are interested with the market being down and with the economy not where it was 3 or 4 years ago. What should people do? Now let's segment it. First, if you are into mutual funds, VULs, what should you do?
Okay, very important. Life goes on, right? When people get into times like these, they get scared. It's a time they take their money out and then they want to go to simpler fixed income instruments. You're in the market for a reason. You have a goal. And those goals were set with these instruments matched up with them. It includes times like these. There are phases in market histories where these things happen. And you just have to weather the storm and focus on what you have to accomplish. So for people who are investing in mutual funds, in VULs, stay the course. Because this is a blip, this is a phase that we will, you know, get out of. And when that happens, you just have to realize that, hey, continuing what I've been doing is the right thing. Now, I put it in perspective, Marvin, if you remember, I told you, people are scared. Wow, 6.4% inflation. Go back to September, October of 1984. The inflation was 60%, right? The volume in the market today went down to about 5, sometimes it's 6 billion. In September and October 1984, there were days when the market was doing what? 5 million the whole day.
Whoa,
5 million pesos total volume the whole day.
Sometimes that's just one very small trade today also.
So what I'm telling people is, hey, we've grown from that time as we're gonna grow from this time. So what you have to see is not what's happening out there and reacting to it. What you have to see is what's happening out there vis-a-vis my goals, vis-a-vis what I want to do. So maybe many things that you have to do now are opportunities within your midst. I mean, you have to execute on certain opportunities. And again, Marvin, as I told you, good stocks are good stocks. No matter what's happening, you get to follow good stocks.
But if they're currently in equity funds, would it be more advisable to shift to balance, or from balance to equity, or just if they have balance, they just stay at balance, they have equity, they just stay at equity?
I'd be more worried about the way I'm acting. With the equity fund that's already there, I'll keep it there.
Okay.
Yes, you put it there already. But when you have new funds, now we can be opportunistic, right? Which means I might not put it on because we know it's gonna weaken. We know it's still gonna be challenged. So I'll be in fixed income. You know, if I can go into certain bonds, I can earn 6-7%. Okay. And because eventually we know inflation will taper off. I'm not saying next month. I'm not gonna be like other people saying it's next month or 2 months from now. I just say it will taper off. Whether you like it or not, it will taper off. When it does, you will now have interest rates on certain bonds that would probably correct. You know, institutions will now offer bonds at a lower price. Then you will have a bit of a premium. When you sell that, you earn a little bit. Then you go into equities again. Okay. So that might be a good time for equities. Okay. But for the moment, I will probably avoid for new money. I will wait in the meantime.
Now, because no one has a timetable on when markets will start to reverse again, you're also an individual stock picker for your own portfolio. You have stocks, you have a portfolio. You said you are trading and investing. If you're a trader naman, you're slicing from the top when it's relatively higher. What should you do right now?
Okay, you and I just discussed it. If I'm a trader, I'm gonna cut a bit now. I think we had an exchange last time, remember? I told you at about 7.9, you know, close to 7.9, I'm itchy. I started selling. Why? Because it's a major resistance for me.
Okay, got it.
Major resistance for me. When I saw it sputtering, it's an opportunity to lighten up. But again, the players that we are, we can never be zero. You know, I will probably say, you know, when I top slice, I'll do what? 15%, 10% at most, then I can buy it back on the support, right?
Okay.
But I will always be invested. And my investment there might, you know, some people might say, oh, you might feel bad, you sold and the market went up. That's 15-20%. I still have a big base of 80%, which is probably bigger than some stock portfolios out there of other people, right? So I just manage it to create more value.
Okay.
That's what I do.
Now, for investors naman who have longer horizon, the market is lower but not as low as what it was before, and it's also not at its peak anymore. Some stocks are not cheap but they're down. What should they do?
Okay, it's now a time for selectivity. Selectivity is very important today because you won't see markets going up altogether. For me, I think that there are real good stocks that people can watch. Like for example, if you're going to be looking at an Ayala Land, you know, the rate of return stays the same. The price and the multiple has actually gone down. We have seen 30s and above for the longest time. We're now in the relatively low 20s, and because of these changes, it might even get down to below 20. So that's, you know, a no-brainer for me, right?
I think when Ayala Land hit around 36, 37, P was around 23 at that time. So very interesting time. So be selective in your portfolio. Any last words of, I don't know, encouragement for people who, I've been getting a lot of messages also that they're scared, they don't know what to do. Should they cut? Some of them bought January pa, that until now their investments from January haven't really recovered, while some people who bought a few months after or had bought San Miguel, bought Pure Foods are doing better today. Yun yung problem minsan na nagkakaingitan when they see their friends earning more than them and their stocks are not doing so well. What's the best thing to do?
I'll quote our good friend Randall Jones on money is behavioral, it's not technical. And I really get down into the psychology of it. When you always feel that way, you will never be happy. You know, you bought and the market went up, people think, oh, I did not buy enough. You know, I could have bought more. So you'll never be happy. So the market went up, it didn't buy, then all the more people are sad about it. And then they never follow through. So I'd really focus on a situation where you tell yourself, okay, what are my goals? What do I want to accomplish? And then I come up with an investment plan that's matched up with that. If the market's not cooperating, it has gone down, hey, that's a good opportunity to snatch up even lower bargains. Life goes on. I mean, I tell a lot of people, okay, you did this for your retirement fund, right? Market went down. You want to go up? Are you retiring tomorrow? You know, I tell a lot of people,
Amazing point.
you are doing this for some goal, and that some goal, that goal hasn't changed, which means you have to stick to your guns and follow through. Again, this might even be an opportunity because markets are not straight line. Drops like this are great opportunities to pick up, get into a better average, and guess what? 2 to 3 years, you're gonna look back at this, you won't even notice that, hey, I took advantage of that. No, by that time you even averaged it out, moving up. That's always the way to go. Focus on why you're doing this and stick to your guns. That's the best thing to do.
Alright, well said. More of this will be in Icon, Davao this October 13. So people from Davao, if you want to learn more and hear from, it's not just what he says it's the experience on top of what he says that you will learn a lot from as well. So I hope this video helps you trade well, trade strong, trade smart. See you all again soon. Bye everyone.
Bye.